We are looking at luxury real estate this morning. In Manhattan, in Miami, more than half of all sales are done now in cash without a mortgage or a loan. And in resort enclaves like the Hamptons, Aspen, and Jackson Hole, it's even higher. But now some of those deals are coming under scrutiny. Robert Frank joins us with the story. Hey, Robert.
Good morning, Joe. More than $2 billion has been laundered through U.S. real estate over the past 5 years. Now the Treasury Department is going to crack down. The agency's financial crimes unit proposing new rules that could require real estate brokers to report more information about all cash deals. The Treasury Department is saying, quote, the systemic money laundering vulnerabilities presented by the U.S. real estate sector and consequently the ability of illicit actors to launder criminal proceeds through real estate threatens U.S. national security and the integrity of the U.S. financial system. Now, the real estate industry already pushing back against this proposal, saying it could stifle the market. About 20% of nationwide sales are cash. That's over $400 billion a year. But as you mentioned, it's even higher in luxury markets. In New York, nearly half of the deals are in cash. In Miami and parts of L.A., it is over 60%. Now, this would come on top of an existing Treasury program that was launched in 2016 that targets shell companies in real estate. About a third of the deals in that program were flagged for suspicious activity. There have been over 50 prosecutions or charges over the past 5 years, including the vice president of Venezuela buying $7 million in Miami condos and a Russian gang laundering over $200 million in New York real estate. And guys, they're talking about residential as well as commercial with this proposal. So this could be huge for both the commercial and the high-end real estate market if it goes through. Right now, it's just in the public comment phase.
Robert, in terms of I understand that the way they're doing it, are the prices exorbitant? Are they reasonable? What do we have in terms of, are they getting value for the money? I would imagine that we're nowhere near the peak of where things could go in the roaring 20s that we're looking at someday.
Yeah, I mean, one of the reasons that U.S. real estate is so attractive to laundering is that, number one, it's a stable investment. And as we've seen in this crisis, you know, Manhattan went down, but now it's come back. So that's terrific. And secondly, it's opaque. The U.S. is the only country in the G7 where real estate brokers are not subject to money laundering rules. And so that's what they are hoping to fix through this rule.
Shepard Smith here. Thanks for watching CNBC on YouTube.